Hello, today is Friday, the 18th of April, 2008. This is Brian Shannon from alphatrends.net, and we had another update today thanks to excellent earnings response from Google today. That stock was up, $89 today. So big earnings from Google and excellent response from the market. And we see that the S&P 500, let's take a look here on the daily time frame, came right up to the level where we've been expecting the major level of potential resistance to be, which is that 139.5 to 140 level. So again, this market has expended a lot of energy this week getting up to this level, and usually the market's not going to break out past such an important area of resistance after being extended. Doesn't mean it can't, but that's just usually not the case. So the market continues to act real good. We saw signs that some of these earnings have been being responded to very positively. Earlier in the week, it was Intel that kind of sparked the rally on Wednesday. Yesterday, we saw that the market was, followed through nicely as well. And again, we're looking at this inverted head and shoulders pattern that may be setting up for a bigger move. Now, again, we've got this downtrend line here still as a potential area of resistance. We've got these lows right at about 140, what is this? I guess it's about 144 or so. And that's also where we find that declining 200-day moving average. So I don't think that we're going to go on to complete this inverted head and shoulders pattern right away, but we are right back up to the top of this range, and we've expended a lot of energy going up there. And I don't mean to, rain on anyone's parade here, because clearly the buyers are in control, but you just want to be very careful up in here with new purchases when the market gets this extended. And you want to make sure that you have an exit strategy in mind if the markets start to begin to deteriorate on the shorter term time frames. Now, looking at this 10-minute time frame, there are no signs of deterioration at all. You can see that since this rally that began with the earnings, and this rally is very similar to the rally that we saw back in here. And what we saw was that we had a declining 5-day moving average, but in both of these instances, the market gapped up above there on earnings or some kind of fundamental news. I don't remember which one, what this one was. But the point is, it's the response to the fundamental catalyst that we want to be more interested in rather than looking at our opinion. It's still easy to make a bearish case for the market overall with the price of oil and the state of the financials and that sort of thing. But again, the only thing that pays is price, and that's really has to be your master here. Now, a lot of people were asking, on Wednesday I said it looked like, early on I said it looked like it was going to be a trend day. Today I wasn't quite as sure because we were up to a level where I was expecting to find perhaps a little bit of resistance, because we've seen it in this in this area before. And I thought that getting extended to this area, it means that the market might not follow through, but we wanted to listen to the message of the market. So I posted earlier on the blog very early that the sellers were in control early on as the market was below the daily VWAP in here. And then at about this point, I posted another chart saying that the buyers looked like they were back in control. And if you were looking to get long, that I think was the place to do it. As the market started rallying once again, you can see it pulled back to that daily VWAP, and then we saw a nice rally here midday, and then some profit taking came back in late in the day, and we saw lower highs and lower lows, pretty much uninterrupted right up until that last 10 minutes or so of the market, where we saw another rally attempt there, and the market came up close to that daily VWAP. So again, the market is clearly extended here the last few days, and like I said in the post to the emailers question this morning, you want to ask yourself, where has the market come from? Where does it have the potential to go? Well, in the last 4 days, we've seen the market rally from 132, and prior to that, it was here in the morning, it was up to this 139 level. So it has expended a lot of energy. Typically, rallies don't continue from that level. It doesn't mean that they can't, but you always want to be aware and wait for the evidence of the market to confirm whatever it is that your belief is. If you were thinking, well, I got to fade this gap, well, then early on you were right. But if you didn't correct yourself quickly in here, then it could have gotten pretty expensive. So you don't want to predict so much as just be aware of what conditions you want to operate under and what evidence you want to be aware of from the market itself. And here, price action, again, the daily VWAP, volume weighted average price, tells us basically who's in control. In the early morning, the sellers were in control. The buyers took back control right in here. That's where I posted that chart. And they pretty much held on to it till about midday. We saw the lower highs and lower lows, and then it came down through that VWAP. So you want to be aware of all possible scenarios. Now, the weekly time frame on the S&P 500, we still see that, we've got this bigger area up near about 140 or so, 142. And one of the readers had said, I've been showing this VWAP since the beginning of the year, which we're clearly well above right now. And since January of 07, the average price the S&P 500 is traded at is way up here at about 143.5. If we go back to 2006, the average price is about 140 or so. So we've got still, on average, most people are losing money in this market who've been in the S&P 500 for the last 2.5 years. Let's say your dollar cost averaging or so. Your average cost is generally going to be higher than where the market is. Now we could go back even further, and you have to look at the popularity of these ETFs and how they've grown. And I don't think that you can get a truly accurate reading based on VWAP because the volume has expanded so much as the popularity of these ETFs has grown. So I don't think going back much further than that really makes a lot of sense. But as I said yesterday, we have a very nice pattern here. The market was acting strong yesterday, and it's continued to follow very nicely higher. If we look now at the Russell 2000, this market was up 75 cents, or about 1%. It made it past this, let me change that to a regular trend line, made it past this level of resistance at about 71.20 or so, where we see this little inverted head and shoulders setting up. And on the 30-minute time frame, we made it past this area that was resistance last week, but it was unable to hold above there. Now on the daily time frame, I'm kind of going backwards from shorter to longer. Generally, you want to look at your longer-term time frames first and move down towards the shorter term time frames. Look at my blog next week for information about my book, by the way, which is about using multiple time frames and finding trend alignment. That's going to be available probably in the next 4 to 6 weeks. It's out of my hands. It's up to the printer and that sort of thing. But this level here at 73 continues to be the most important level for this market to really say that the buyers have gained back control of the trend. Now we're still, we're still within this range here, and the middle of the range basically at about 69 bucks a share, the low end of the range 64, and here we are up, approaching the high end of this range. This market is expending energy as well. I was saying that it looked like 70.20 was the best level of support. That clearly wasn't even, didn't even come close to being tested today, obviously, with a gap. But now we want to see this level where we've seen some prior resistance turn into some support if this market continues to pull back. If that fails to hold, then we want to look maybe at about 70, 75 and where the 5-day moving average is. And on the S&P 500, I think that your best level of what should be support going forward will continue to be this 137. That's a very important level for this market, as I've been stressing over the last week and a half or so. And we could still see some, a normal retracement, let's say, of this move. Let's just take some Fibonacci from the week low to the week high. A third retracement would take you down to about 136.80. And that would be good to see, actually, I think. So let's take a look at the financials. The financials were up 2% today. But these guys still have the most work to do in terms of really being convinced that the buyers are gaining the upper hand in here. You can still see that this trend line, this market came up and touched on it once again today after it's been hitting in here. And you can see the more times a trend line, like any resistance, is touched upon, the weaker it becomes. And just breaking the trend line, again, doesn't mean that the trend has changed. It means the rate of descent has slowed. This market could still go sideways for quite some time. Bullishly, though, we're above 26.20. That's been a very important level here over the last 2.5 months or so. And we're back above that for now. We're also back above the 50-day moving average. But in order to say that the buyers have gained control, again, we want to look at this time frame and kind of look at this trend line, number one, and some of these highs here. If we can see a higher high past 27.40 and then 27, or I'm sorry, 27.20 and then 27.40, then I think we could see the shorts get squeezed in here a little bit. Maybe we get a pullback just below 26, and then we push for another, make a higher low in here and then break. That would be a nice bullish scenario. Let's, let's not trade that, but instead be aware that that's a possibility. This market is also, has had a heck of a run here this week. Percentage-wise, what is that? From 24.5 to 26.5, so 2 points, about 8% or so over the course of the week from the lows. That is. So a lot of energy's been expended on the upside in this market. We're seeing that there was some profit taking up in there, and it's kind of what you would expect after such a powerful rally. But the market is clearly making a lot of progress. The S&P, or I'm sorry, the Nasdaq, real bullishly here, made it above and closed above that $46 level. This is the market I had pointed out as potentially having resistance near that area, or near the 46.40 level. This is where these last week highs were intraday. And we got above and held above that. So now, to me, I think that puts some of these other levels into possible contention. Here, we've got this downtrend line that would meet up with this market at about the 47.5 level. We've also got these prior lows, which are just about 48.5, and the 200-day moving average about 48.30. So I think that in this area, basically from 48 to 48.5 or so, looks like an area where this market has the potential to go to. And here right now, I just switched over to big charts, because on big charts, this volume by price feature is something that shows, here we're looking at a 6-month chart, and on this 6-month chart, you can see that the biggest volume that this market has traded has been at about that $44 level. And that's where we found support recently. That's where this market has rallied from. Now, price has memory, and we look at this as now the most important level of support in here. Now you want to look for potential resistance. Well, where was their previous heavy volume traded? Because that means that there's participants who are trapped with losses from that level. They might offer their stock out where there are these big levels, and that might slow it down. So that becomes potential resistance. Here we see 48 is clearly one of those levels. The bigger level, though, is right up here at about $50 a share. So if the market can make it back above that $48 level, then 50 becomes the next target. Don't get too carried away with these upside objectives, because, again, this market's clearly extended, and there will be pullbacks before we get there. But the market is showing some very bullish signs here. Just maintain your discipline, choose your spots for entering, and not all stocks are up today. You look at Google, that got all the headlines. It gapped way up and had a great day as far as the trend goes when it got back above its daily VWAP. And here, there was close to 30 points of upside. If you look at ISRG today, this stock gapped down about 35 points. And then if you look at the intraday action in there, clearly we have another, this ISRG got, smacked real hard, down $60 today. So a lot of opportunity long and short, but overall the market is showing that it is recovering, and that's obviously good to see for the bulls.